Hello and welcome to Lapping Analytics. My name is Jimmy Lapping. I'm a statistician with an interest in a range of topics, including the financial markets. And in this video, I'm going to take a look at the interrelations of monthly performance of main US stocks and Bitcoin since 2014. Reason for doing so is because there are several ideas, sometimes also misconceptions regarding how these different subjects correlate with each other. And well, we're going to have a look at those ideas that exist. So on the left, you see the 15 subjects I have included in this analysis. So that's Bitcoin, strategy, Microsoft, Apple, Nvidia, Amazon, JP Morgan, Coca-Cola, Google, Meta, Tesla, Visa, MasterCard, Pepsi, and Walmart. So it's from a total of 6 different segments, I would say, or sectors. First of all, crypto, that's Bitcoin. Then you have also technology, communication services, consumer discretionary, consumer staples, and financial services. So different sectors of the market. And we will have a look at how these interrelate with each other. First of all, when we have a look at some just plain descriptive statistics, we see, among others, the so-called standard deviation, which is a measure of dispersion in the monthly performance. And we see that the four subjects that have the highest standard deviation are Bitcoin, strategy, Nvidia, and Tesla. These have relatively high standard deviations, which means that there is more dispersion in that monthly performance. However, when we take the combined view of mean and median, two measures of central tendency, the difference being the mean is, of course, more influenced by outliers than is the median. We see that, two of the relatively volatile stocks also have shown overall good performance. On the one hand, Bitcoin, on the other hand, Nvidia, which is not to say that you should have bought them, because, of course, we've also seen months of very poor performance. By the way, just a disclaimer, I'm not invested in any of the 15 subjects in this video, so I have no conflict of interest regarding any of this kind of subjects. And by the way, this video should not be used as investment or trading advice. That's always the case for my videos. But just to have that clear, I have no conflict of interest to declare, because I'm not invested in any of these subjects. I myself invested in European stocks, and that's none of these are in the list of stocks that I'm invested in. And crypto is something I've never touched, and I have no intention of changing that, at least not in the near term. Okay, so you can see that Bitcoin and Nvidia are the ones that have shown all in all, the better performance, and but in general you see a tendency of upward movement. When we have a look at just a closer look at some separate subjects, then we see, for instance, here Bitcoin and strategy. Reason for doing that is because, especially for strategy, you see that starting 2020, the volatility increases sharply. Why is that? Well, because starting August 2020, strategy started to buy bitcoins, and has been increasing position since. So, and you see that has come with an increased volatility. Interestingly, though, you see that the volatility in Bitcoin is not currently the highest that we have seen. It has actually come down somewhat compared to previous periods. I mean, still you have notable swings, as you will have seen if you follow the Bitcoin course, but it's not at its most volatile period. In fact, of these four periods, it has the lowest standard deviation of thus far. So that's interesting. And we do see that, for instance, for strategy, the last period has been a very, on average at least, a good period. Okay, now have a look at the Nvidia and Tesla, which were also two of the more volatile uh, subjects in that list that we included, and we see that especially Tesla had a higher volatility in the COVID slash immediate post-COVID period. So how does this all interrelate? Well, so here you see a so-called network of correlations, where blue lines indicate positive correlations, red lines would indicate negative correlations, but no red lines are visible. Thicker lines indicate stronger correlations than thinner lines. And the colors of the nodes that you see here are conform the sector or segment to which the subject belongs. At least here I have used the description of Yahoo Finance. But I think that also in several other places you would get the same kind of categorization for the subject. So you have on the one hand Bitcoin, which is crypto. Then you have as technology companies Strategy, Apple, Microsoft, and Nvidia. Communication services companies, that's Google and Meta. That's no surprise, of course. Consumer discretionary, that's Tesla and Amazon, although they are different segments of consumer discretionary, also known as consumer cyclical. Cyclical because they are more, they tend to be more cyclical than the consumer staples. Consumer staples here is let's see, where do we have him? Walmart, Coca-Cola, and Pepsi. Consumer staples, which is also sometimes referred to as consumer defensive, because the demand is supposed to be somewhat less cyclical than for the consumer discretionary. So yeah, that's why we do distinguish those two sectors of the consumer part. And then financial services, we have JP Morgan, MasterCard, and Visa. Now, these are plain correlations. And there's also, when we use a slightly different estimator for this network to just visualize give most weight to the strongest correlations, and will shrink the weaker correlations a little bit so that the most important connections are more visible, then you do see the categorization of these different sectors reflected quite well, I would say. I mean, Pepsi and Cola, of course, the same kind of drinks, although different brands. It's normal that that connection is strong. Visa and MasterCard, similar services, also no surprise that that is strong. But you see, for instance, the big seven are not all that strongly related. Apple and Tesla, for instance, Apple or Nvidia and Microsoft, well, you see a bit stronger relations, but there are also, I mean, for instance, yeah, Meta, for instance, with Apple, that line is not even visible. That it's a correlation on like corrected, like a corrected correlation in this kind of network closer to zero, so it's not an important connection. So yeah, you do see that it's not all that interconnected, and well, Bitcoin is more of course, above all, linked to strategy, which makes sense because strategy buys Bitcoins. But it's clearly less connected to the other financial subjects in this network, so Visa, MasterCard, and JP Morgan. And it's not that much linked to the other tech stocks either. So to just summarize Bitcoin as a yeah, just another tech stock without earnings and outlook numbers. Well, it's a bit it's a bit too gross of a summary. So it's a bit more complex than that. Okay, that was a short video this time. I hope you find it useful. If you have any questions or suggestions, feel free to leave them in the description below this video. Thank you for watching. I hope you enjoyed it. Thank you for watching. Thank you for listening. And I hope to see you next time. Bye bye.